Okay, good afternoon, folks. Good afternoon. Good afternoon. Hopefully, you're well. All had a good weekend. Ready to fight another week in the markets. Let's have a look. Make sure I'm coming through. Okay, give me a sound check, please. Just make sure everything is clear. That will be good. Just give me a quick sound check, and I'll be back. Right. Yes, coming through. Okay. Hi, Addison. I am, and what I see is me. Hello. Can you see me? Okay. Hello, Sanjay. Hello to you. Good to see you. Mastonal is in the house. Let's have a look. And Simmer Hill is here as well, a fourth trader, and a few others as well joining in. Welcome to this weekly live stream. If this is your first time, a very warm welcome. We do this each week on a Monday, basically mapping out the trading week ahead, things that you should be keeping an eye on in the markets, whether you're trading the fundamentals or not. I still think it's important that you understand basically what is driving the markets, what to expect. After all, we are traders, and it's the sort of macro sort of picture that we're ultimately making our decisions on, what is going on in the economy. So we basically go through what's been driving the markets over the last week, the main sort of movers, and if you like. Then we'll talk about this week, the economic calendar. We'll just scan through it. I think I always try to throw a bit of education in there as well, so you can basically learn a little bit about this data releases, what they mean, and how they're likely to impact the markets. And then we'll just jump onto the charts and have a look at some potential trading opportunities. Not a massive amount going on, I must admit, at the moment in the markets. It's a very slow start to the week. But we'll have a look when we get onto the charts in a moment. And also, we do give our gold giveaway. So we basically have a $12,500 experienced assessment account to give away absolutely free to one lucky winner who's basically guessed the gold price for the close of the week. Okay, so I use this is the gold chart that I look at. So basically, it's the first one on here. I'm not related to these. We're not affiliated with these at all, but it happens to be Oanda, I think. So basically, gold last week closed at. So I go to the weekly chart. It closed at 3334. Okay. Is that right? 3336 I've got here is the close. 3336. Yeah, 3336 it basically closed at. 3335.6. So 3336 was the close. It's down basically, what was it? Down a good 2% really on dollar sort of. Well, dollar was a bit strong, but on the sort of, the reversal of the flight to safety, obviously a bit of Ukraine, Putin, and so forth. So gold was basically under the pressure a little bit, and gold was and the dollar was a little bit stronger as well. So gold basically closed at 3336, and we had one lucky winner. That lucky winner came in with his or her guess of 3340, so just $4 out. It was close. We had someone that was $6 out, and another one was about $10 out. So very good guesses this week. Very good guesses this week. But Zainab Jafar, if you're listening in, congratulations to you. You have won yourself a $12,500 experienced trade evaluation. You need to be obviously in the stream to know that you've won. If you're not in the stream, then I obviously can't award you the prize. So if you're listening in or watching on catch up, send me an email, and we will get that all sorted out for you with a coupon code. If you're not listening in, then of course you don't know you've won. So if you do enter the competition, I suggest you do come back the following week to see if you've won. Right, so congratulations to you. I'll open up this week's competition as well. We had quite a few entrants last week, so I'll open up this week again. Let me just see if that is the correct form. Okay, so there it is. It's a Google Doc. Okay, what you need to do is leave your name and your correct email address. You need to put a correct email address in there, otherwise it will not be valid. Simba was 3323. Oh, we were close. Not bad guess. 3336. Yeah. So anyway, leave your guesses in there, and we will close that in about half an hour's time when we wrap up the stream. Okay, so put your best guesses in there for $12,500 assessment account. What do I think before we get into the economic calendar? Or what do I think about gold? Well, I think it's in a bit of a range, really. Gold for me, I would have to be, I'd have to certainly look at this zone up here as a level of resistance. We had this really high wicked daily candle that shows you that this level of resistance is being respected. Then we had the pullback. Okay, and then you had this bearish engulfing pattern on the pullback from from the week. Again, that is a negative bearish sort of sentiment. I think technically, it most probably is. I'd be looking at it from the downside this week. I mean, this is the 4-hour chart. Not a lot going on. Not a lot going on there. I would be just close this up a little bit. I mean, I can tell you now, if you trade my boomerang strategy, you would be short this on the boomerang. So pull back, fails to take out the previous high. That's your break of structure there. So you would be short here at around the 338 level, 3380. My profit target would have been back down there, exactly where it's bounced from. I think we're going to have another challenge at that. Lower highs coming in, no real strong momentum pushing this up. It gets back up to this sort of zone. For me, I think my bias will be lower. So I can't enter my own competition, of course, but I would say 3.3. I would say we could target 3,300. That's my guess. 3300. I had 3305 last week, but now I'm going to go for 3300. So I was way off last week. There you go. 3330 is my guess. Let's have a look to see what else is coming in. Today we've had 3347. We've had a 3327. We've had 3290. Addison, that's nearest me. So yeah. There's not big extremes everywhere. We got the lowest is 3282 and the highest is 3347 at the moment. So not a big range, and I agree with that. I don't think it's going to be too big, quite frankly. So it's most probably quite a tight little range this week. Anyway, we'll keep an eye on that, and I'll let you know at the end when we close it exactly what the sort of range is. So there you are. Okay, so what is in store? Well, before we talk about what's in store for this week, let's just talk about what was the sort of the main driver of last week. As always, I've got to say this. I know it's boring, but I've got to say it. Investment advice, it's not. Education, it is. Entertainment, you be the judge. But yeah, please, don't take this anything I say as investment advice. If I call a trade, like I've just called my gold, I was well wrong last week. If I call a trade, if I call a bias, it means nothing. So do not trade the back of what I say. If I trade strategies, I trade my own strategies, and I have winning trades and losing trades. And the idea is to have more winning trades than losing trades, and to have the winning trades make more than the losing trades. But that plays out over time. It doesn't play out over one trade. So I can call 5 trades wrong on the bounce. But it's what you do over the long haul that matters. So don't take this as investment advice. Right. So last week, main drivers. Last week, we had the RBA, stands for the Reserve Bank of Australia. They cut their interest rates as expected. And the forward guidance, I think, was the important bit. Basically indicated that there may be one more cut in the tank before the year end. So that was pretty much expected. The Australian dollar was under a little bit of pressure last week, but nothing major going on there, including the New Zealand was slightly low as well. Last week we also had CPI came in lower than expected. CPI stands for Consumer Price Index. Okay, came in at 2.7. Markets were going for 2.8. I was listening to economists and analysts on Bloomberg. Some was talking about it going higher than 3%. So it actually came in lower than expected, which is now fueling the belief that the Fed will cut interest rates at their next meeting, which is on the 17th of September, I think. I'm sure it is, yeah. So the odds of them cutting interest rates now have now they actually come down a little bit. I mean, they were up at 96%. Now it's down at 83%. If you look at the CME's FedWatch tool, which we always look at, but you can watch that in your own time. I'm not going to dwell too much on that now. But now it's a chance of a cut of at 83% cut, and we've got a 55% chance of no. I'm going to not guess that. I'm going to put it up. The chances of 2 cuts by the end of the year. Remember, you go to CME FedWatch, free, not affiliated, but most of the economists look at this. So 85% now. Okay, it's not 83. 85% chance now of a cut, slightly up. But the next meeting on the 17th of September, by the year end, which is December, we are seeing a 46, 70, 83% chance of a cut again by the end of the year. So 83% chance, that's where I got that number from, 83% chance of 2 cuts. And of course, that changes as we see data released. And of course, the dollar normally reacts to that as well. So the inflation coming in lower than expected was good. You saw the job numbers the week before, NFP, massive revisions, and which was not good. And obviously, that's when Trump fired his head of the data release department, Bureau of Data, whatever it's called. So the Fed have 2 mandates. They've got to get inflation in around 2%, and they've got to maximize employment. Well, employment's not looking too good, and inflation is now maybe pushing lower. So that basically means that the Fed have got chances, have got the room, if you like, to cut interest rates. So there you are. And last week we also had Trump meeting Putin, which was a bit of a non-event. Unfortunately, I don't get too political on this channel, but yeah, it was a bit of a non-event, bit of a turnaround from Trump. I was expecting, if you listened to me last week, that there would be a much more of a serious, almost like breakdown, and that he would be ratcheting up the sanctions, which would on oil, for example, on Russian oil. And I thought that is going to put the fuel under the oil price. It didn't happen. I mean, oil price is marginally higher now. He has still confirmed that the sanctions will be going on for buying Russian oil. But I was expecting a much more of a sort of aggressive move in oil. It didn't happen. Maybe at some point, if Zelensky is meeting, we'll talk about that in a second. But Zelensky's meeting Trump today, in fact. And I can't see it happening. I mean, if they agree a peace deal, well, obviously it means Ukraine have to give up some land and what have you. So it's mostly not going to happen. But that is must be more important than today's meeting. All the European leaders are going over there as well. Yeah, the meeting kind of didn't do anything. Yeah, I agree. Absolutely didn't do anything. Right. Okay. So the big movers last week, not really many big movers, were there? Gold was, I say, down about 2%. Dollar is down 0.5%, really. Yes, the dollar, that doesn't often happen, actually. Dollar really wasn't doing anything, as you can see there on the euro dollar. DAX was down 1.5%. FTSE was up 0.5%. no real moves. Stocks were good though in the US. We had the S&P 500 hitting all-time highs yet again, all-time highs for the stock market, and Bitcoin was down 1.5%. Although Bitcoin was actually quite a lot higher at one point in the week, but ended the week down. Hit 124, I think. I think it's trading at 115 now. But yeah, Bitcoin ended up slightly down, but was quite a lot down from its high of the week. So a bit of profit taking maybe there coming into the crypto world, as it were. Okay, so what's in store for this week? Monday, we've got Zelensky meeting Trump in Washington. So do pay attention to this. I mean, there could be some shocks. I'm just hoping that it doesn't all blow up in the Oval Office like last time. That's just an embarrassment on the world stage. But hopefully that doesn't happen this time. And it's going to be, I mean, he's going to be well trained now, Zelensky. He's not going to let himself go like that. So we'll see what happens there with the meeting. I mean, Trump does seem to be a bit more appeasing to Putin at the moment, or certainly from that meeting. But the fact that they didn't agree a ceasefire and didn't agree to land swaps and all that stuff must be good news for Ukraine. But so it could be a mover. It could be a mover if there is some type of deal or breakdown. If it all goes belly up and a big breakdown, well, of course that's going to affect the stock markets, and it's going to affect gold. Gold will go higher, and you expect to see the stock markets come under pressure if there's another flare up in the Oval Office. I don't think that's going to happen, but something you do need to pay attention to as traders. That could really, change the risk on, risk off sentiment. At the moment, we're risk on, taking on more risk, buying stocks at all-time highs. That could change if the wheels come off, or if the wheels show signs of progress. Then you can see the stock markets smash higher again. Tomorrow we've got CPI out in Canada. Consumer Price Index expected to be coming in same as last month, up 3% from 3% last month. I mean, they've cut interest rates there already, so I mean, I'm not much more to say about that apart from the fact that inflation is just above its target. Oil prices have been weighing on the Canadian dollar over recent time. Oil prices are significantly down in the last few months, not only to oversupply, but also because of the mainly because of the oversupply, and also the economy's slowing down. So CPI expected unchanged in Canada. Wednesday is already the busiest day, I guess. We've got the RBNZ policy statement. They're expected to cut interest rates from 3.25% to 3%. So they're going to be, I think it's 100% priced in by the swaps market. So we'll see a cut in interest rates in New Zealand. Again, New Zealand and Aussie currencies, the commodity currencies that normally do better in risk on, were under pressure last week. We'll see what the follow-on statement is. It's the follow-on statement that you have to be watching on these things always. These are pretty much all priced in now. You never really see a big shock in interest rate decisions. It's more the follow-on statement that you need to be watching to see if they're likely to cut again by the year end. If they are bullish on that, or when I say bullish, I mean if they're sort of dovish on that, i.e. another cut, then you can expect to see the New Zealand come under pressure in the basket of currencies. UK has inflation out as well. Consumer Price Index, which is inflation, is what the consumers have to pay more than they paid last month. CPI expected to come in at 3.7% from 3.7%, still massively above their inflation target. Now you know what inflation target is. Inflation target's 2%. You've also had the Bank of England a week and a half ago. They cut interest rates but only by a marginal vote, 5-4. And the inflation number here is one of the reasons why it was a 5-4. 4 voted not to cut. So it's pretty fair to say that inflation comes in at 3.7 or above, 3.8, then you can pretty much rule out another cut. This is only me saying this. I don't know what the analysts are saying. The real analysts. If these numbers come in line or higher, then I expect to see sterling maintain its strong position on the basket of currencies. Okay, so it's one of the strongest currencies out there at the moment, benefiting, of course, from the weaker US dollar over the last 6 months. But the British pound, is one of the strongest currencies out there at the moment. And then we've got the FOMC minutes. That's basically at 7 p.m. on Wednesday, UK time. That basically will be the sort of like the summary of the last meeting. And, they haven't cut rates yet. It's likely that will cut in September. There may be some hints in the minutes of the meeting that will give us clues. Are they definitely on course for cutting? So keep an eye on that on Wednesday. On Thursday, I've taken a screenshot here from Forex Factory. We've got a lot of PMI data in the Eurozone. Okay, so the PMI data basically stands for Purchasing Managers Index. It's a forward-looking indicator. Central banks love a PMI data because it's not a lagging indicator. Anything above 50 is an economy that's expanding. Anything below 50 is an economy that's contracting. And you can, it's a mixed bag, isn't it? I mean, it's just pivoting around the 50%. But don't underestimate the importance of that. It's 8:30 in the morning on Thursday morning. You are expected to see a movement in the euro. It's as simple as that. I don't know which way it's going to go. I don't know what the numbers will be. But the markets do react to a PMI data. So I would say, be aware of that. And also in the UK as well, PMI, services PMI, manufacturing PMI is maybe ticking up a little bit. And flash services PMI, again, ticking up a bit, 51.9 from 51.8. Again, if this is the case, then there's no need to cut interest rates if everyone's getting optimistic about the future. So keep an eye on that. High numbers would normally support the currency. And why would it support the currency? Because they don't need to cut interest rates to spur on the economy. So that's high numbers supports the currency. That's all you really need to know. So high numbers in the Eurozone, you expect to see the euro tip higher. I think the way to trade those numbers, I don't trade the data releases anymore. I used to when I was in the trading pits, of course, because we literally had them first. Because we were the market, we moved the market that you saw on the screen. That was us moving them, and we were the first ones to see it. But now you get to see the numbers, and when it comes out of your squawk or your ticker, it's 5 seconds late, and it's reacted. The best way I think I used to trade this on non-farm payroll. I used to take the number 30 minutes before, look at the euro dollar or the dollar yen. 30 minutes before the release, and then let the release play out and assume that 30 minutes after the announcement, so basically an hour from when you took the first read, markets will be back to where the first read was. And that happened more often than not on non-farm payroll. The reaction that you have, and then it just goes back to where it was beforehand. Basically, it's all priced in beforehand. I don't trade it anymore, but that's one of the reasons I used to trade it. So again, with PMI, if you do see a massive reaction, it's mostly a knee-jerk reaction and mostly pivots back to where it was before the release. Just think of that. Watch that. I mean, if you've got nothing, if you're looking at these data releases, don't trade it. And as I say, don't trade that, but just go and maybe do your own analysis on that. And it's quite often the case. The data will have the reaction and then buy the rumor, sell the facts, as it were, goes back to where it was beforehand. And then on Friday and Saturday, in fact, they've got Jackson Hole, which is basically a meeting in Jackson Hole. It's a place in the US. It's basically where all the central bankers, they get together, discuss policy, discuss the outlook, and so forth. It's normally a big event. Governor Powell is speaking. That can be a big one. Of course, we've got a lot of Fed stuff going on this week. So, it might not be as significant, and a few of the speakers out there, but you do need to be aware of that. So there you have it. Okay. All right. That was from last week. I don't know if anyone's seen this. I think this is still on. The slides from last week. 10% off the launch offer, Light 10, if anyone's interested in this prestige program. We're at static drawdowns, 6% profit target only, low profit targets, unlimited trading days, 80% split, static drawdown, and there's no time pressure. Anyway, I didn't mean to pull that slide up. I think the offer's still there. Prestige Light program is now live. I don't know if that discount code is still working, to be honest, but you can check it out. Right. Okay, folks, what's going on then today in the markets? As I say, not a great deal going on. Let's have a quick look at the currencies. You've got, this is the momentum meter. As I said, this, the orange line and the grey line are the commodity currencies. That's the New Zealand, well, the Australian dollar is the orange line. And New Zealand is the grey line, the sort of lowest of the packs. These are still the weaker currencies. Canadian dollar is also a commodity currency. I don't know why the CAD is so strong this morning. Maybe because of oil prices are ticking up. But for me, this white line is the sterling. Sterling is being steadily strong. Let me just take this out to the daily. I think I haven't checked it beforehand, but I would assume it's going to be up there on the daily. Not exactly where it is. It is up there. So this is the pound on the daily chart. It's the strongest currency in the basket of 8, followed by the euro, and these New Zealand dollar is weak as well. So New Zealand does come under a little bit of pressure this week. Once they've cut interest rates, that'll be it, I think. And and we'll see. New Zealand just carry on with its sort of bearish momentum. But one thing I do look at, and in fact, my daughter had a friend over from Switzerland yesterday, and I was talking to her over lunch about the Swiss franc being a good place to go at the moment. Switzerland, it is one of the weakest currencies on the basket. They've got negative interest rates in Switzerland, and they've also been whacked with a 39% tariff from Trump, which means they'll all be scrambling around to do deals with Trump to preserve their exports. But nonetheless, the Swiss franc is still one of the weaker currencies. So if you're looking at buying a strong currency, well, you look at buying potentially the pound. You're looking at potentially buying the euro and selling the Swiss. So that's where I'll sort of always focus my attention. I don't trade these crossovers. I know someone was in the chat this morning trading this because one's higher than one's lower. I don't do it because of that. I don't trade this. This just gives me an idea of where to look. Trading is all about having an edge. Okay, that's all we're trying to do. Just have a slight edge in the markets. I know we go on about this in a lot of my educational videos, but the casino has the slightest of edge on the roulette wheel. Yeah, it's a slight edge, and that's what it capitalizes on. If you can get a better than a 50-50 edge, then you've got a trading strategy. Okay, so you just need to be able to put up with the losses as well as the wins. And if I'm following a trend, well, I want to basically give myself an edge. If I'm following a trend, doesn't it make sense to buy a currency that's strong? And doesn't it make sense to sell a currency that's weak as your preferred choice, rather than trading a currency that's basically moving in line with each other? They're not going up, not going down, basically flatlining. Well, that's not a trend. This little tool here shows me that. It's very chill today, so there must not be a giveaway, which is good. The question can be answered. There is a giveaway. The form's above. The form is above where it says host. You can put your guess in for the goal for Friday. Okay, so there are you the ISIS that I was working with me 5 years ago when I was at the old place? Were you? So let's have a look then at I don't know, let's have a look at euro against the Swiss as any particular. And the other thing about having an edge, and I always say this, is if you're following trends, you can buy, you sell, or you do nothing, right? So if you're following the trend and your moving averages are all pointing up, well, you're only buying, yeah? If moving averages are pointing down, you're only selling. And if you don't buy in front of a level of resistance or sell in a level of support, you have an edge. You have just created there an edge. It's just a matter of doing it. And people spend lots of money and lots of time wasting time on strategies. And really, all you need is a very simple strategy and stick to it. Not you. Okay, fair enough. SMC says, what are you saying here? No, that's not this. No, this is guess the goal for the week. SMC. But yeah, I understand what you're saying about when we have the quiz, where we have the trivia. I understand what you're saying on that. I understand what you're saying. So I might change that for the next giveaway. So yeah, appreciate that. It is a bit of a speed contest, and from what I've seen in last week's answers, we did retail sales, and it's funny to see about 8 answers, all exactly the same, all exactly from ChatGPT. Remind me to get the answers from. It's a shame, really, because I do give the answers before the actual before the trivia questions are revealed, but people still have to find it on ChatGPT, which is a bit odd. There you are. I suppose we're using chat for everything these days. What are we looking at? We're looking at pound Swiss. So pound Swiss, well, you got a boomerang trend continuation trade here. Okay, so you would have been slightly offside. This here is my boomerang trend following strategy in its true glory. Okay, so you had an entry here, back here at 108.72. The swing low that led to that swing high was here. Your stops would have been there. You'd have been looking at a nice profit on that. We'll see this pullback goes to the previous high. We've had another one here now. So this pullback hits the high, pulls back. There is your entry. You would have been offside a little bit, but you're now basically flat or at break even. Your stops are going to be down here. And so there's your entry. Where's my profit target? Have I got any roadblock resistance? Not really. Not really. I mean, you can take that now. I mean, don't trade this unless you're trading my boomerang. If you don't know what my boomerang is all about, I think I've said this before, but let's see if I can put it up here rather than me going into it now. We put this education package together. Okay, so got a whole bunch of content in here, lots of videos. There's about 50 videos in here. And the strategy in here, I talk about the boomerang strategies, the boomerang trade walkthrough, and the reversal strategy as well. All good, well prepared videos, which you can watch in your. I don't want to hear that sound. So lots of stuff going on there. If anyone's interested, there he is. Gosh, had some hair there, did I? Maybe not. I got a psychology course prepared for by Simon, our CEO. A wonderful psychology course. Quite honestly, I know you spend a lot of time watching all this stuff on YouTube and all that. It's all here. It's all here. Also got lots of resources as well, trade journals and the like. Yeah. If you want to get your hands on any of that, you can do so. There's got a quiz as well. So there's about 500 questions, which will give you a certificate at the end of it if you pass on the video to test your knowledge once you've watched the video. It's a bit of fun there as well to test your knowledge. So that's free if anyone wants it. Okay, absolutely free. All you need to do, if you're serious about trading, I'm not going to give it to people that are not serious about trading, obviously. But if you're serious about trading and you take an assessment account out, 50K above, which is actually running a 20% discount on at the moment on the Experienced Trader program. If you take the assessment account with a 20% discount, which is already priced in, and use that code there, PropIQ, then you get access to all that, and you also get a one-on-one with me, which will be an hour with me where we get to talk about your trade plan and so forth. And quite often I have follow-up and one-on-ones as well. So you get all that. You get all that stuff. So use the code PropIQ on the checkout. Anyway, so back to what I was saying. This is the boomerang. So your stops are below, your profit targets at the next level of resistance, and I think you can take this up to there. Quite frankly, who is Frank anyway? You can take that up to about there, and that with a trend, with a strong pound, with a weak Swiss, no roadblock resistance. You get 1.6 to 1. I've seen worse trades than that. Of course, some of them change. Trends don't always continue, and they obviously do change from time to time. That's basically why you have reversals, but that's not a bad trade. You got the Euro Swiss. Euro's quite strong as well. What's that one doing? Okay, so this is what I call roadblock resistance. See this one up here? this all fell apart when we got up to 94.50, basically 94.45, back from April the 21st, 4th. Okay, so looking at that high there, that's where you saw liquidity come in to really push this lower. Yeah. And that's obviously where we've stalled. So although I like this trend, I'm not going to buy in front of here. I've only got 24 to... So you've only got 25 pips before you've got massive resistance. So you don't buy that one, yeah? You don't buy into massive resistance. You let it go. You do the hardest trade on the book, and that's sitting on your hands. So yeah, we like the pound. We like the pound. What about Canadian dollar is reasonably strong at the moment? Again, why is Canadian dollar so strong? Is that because of the because of WTI? No, that WTI is unchanged. Put a bit of a bounce in. So we did have a bounce from, we had a 2.5% bounce in oil. Maybe that's why CAD's going a bit stronger this morning, or today. But CAD Swiss. Yep, bounces off this level of support. Is this your roadblock? This is what held up all this price action. Comes back down. Bullish engulfing pattern. This is a naked trade, by the way, on the 4 hour. If anyone follows my naked setups, now you've got the bullish engulfing there at the support. That's a naked setup. Naked because we don't use technical indicators. Stops below. Profit targets up there. Profit targets to... Yeah, I've seen worse trades than that. I mean, I would be a little bit... I'm not taking this trade. Right, but I would be a little bit concerned about that. I'm not saying we're not going to get through it, but all that consolidation where we only just broke through and then rallied and then dropped like a rock, most probably is going to see some consolidation here. So again, it's all about picking your battles. Most probably is not a battle I'd want to pick. This is how I do my analysis on the weekend ahead of the week. Set up my levels and targets. And away you go. Dollar yen. What's going on, dollar yen? Not a lot. Yeah, it's a bit of a quiet day. Stocks are still doing okay, though, aren't they? S&P 500. S&P 500 is. So we had So we had the highs on Thursday. Pulls back. I think this is a bit of a support zone for me. If he gets in here, it must be worth a little pickup. Zelensky and Trump could deter this. If the wheels come off today, then this is going to smash through, I would have thought. Rishi Raj sued. Should we wait for the next candle after engulfing to retrace and cover half the golfing candle straight away or buy and sell engulfing? Yeah, sometimes they're a trap. Well, I don't know. I mean, you've got to come up with a strategy and backtest it. My naked strategy doesn't say that, which we backtested over 16 years worth of data, and it had a 79% win rate, and that's just looking for reversals. But you can test the strategy and see how you get on with it. Yeah, the thing about these nakeds, as far as I'm concerned, Rishi, is all to do with the level that you're taking them at. When I say the level, I'm talking about the roadblock resistance. I'm convinced, if on a Sunday you want to spend some time marking up your charts just for the massive levels, in all the different asset classes that you trade, and just put in your notifications, just wait for those and pick the best one of the week, to grab 30 or 40 pips, reversal off that. I think you can do a lot worse than that. Just taking 1 or 2 trades a week. 0.5% risk. You'll have your prop assessments, certainly that 6% one now that we've got going, the Prestige Light. You'd have that passed in a month or so, couple of months, and you're on your way. Trading less, often best. So I think those levels, Rishi, is all about. I think that is all about the levels that you pick. I think is the most important part of it. So yeah, okay. Well, I haven't got to do much more to say really today. I mean, we've got strong, strong pound. CAD's putting on a bid. Swiss, I still don't think I want to buy any Swiss, and the commodity currencies must be under a bit of pressure. Stocks flatlining. Keep an eye on this afternoon for your for the Trump thing. Right. Okay. Let's have a look then, just quickly, at the split. See if I can take this off. Let's have a look. So these are our guesses for today. Some of them anyway. So these are our guesses today. I'm closing it now. So we've closed that now. So we've got, you know who you are. I'm not going to put your names against these. So yeah, it's all pretty. Anyone sticking out here? This is a low one here. 3183. You know who you are. That's the lowest, isn't it? Oh no, 333. That's mine. 33 is the lowest. Oh, 33 again. I can tell by the names if this is the same person, but does look very, very similar, doesn't it? 33396 and 33634. If it is the same person, I can only take one of them, so I'll take your first one. And the highest one we had was 3425. That's the highest one we've had today so far. So good luck to you all. I'll announce the winner next Monday on the weekly live stream. So there you are. You're all set for the week ahead now. Not a massive amount of data out this week, and I think the macro picture of global wars and all that I think is going to be more important than anything. We expect to see a cut in New Zealand, maybe a dovish cut. A hawkish cut, basically meaning that'll be it for now. And then you can obviously you've got the continuing strength of the British pound, which I think mostly prevails for this week. And dollar is not doing very much, as you know. Let's have a look at the dollar quickly before I finish off. Euro dollar. It accounts for. So we're back smack in the middle of the range. Accounts for 30% of all FX transactions is the euro dollar. Do you know the US dollar has 88% of all FX transactions? So you can expect to see whatever happens to the dollar to affect all the currency pairs in a certain way or not. So beware of correlation. But this at the moment is just not doing very much at all. We had a bit of dollar weakness, now coming back, bang smack in the middle of this range. So difficult to call. No worries, Rishi. No problems at all. Okay, folks, thanks for that. Thanks for tuning in. Good luck with the competition and congratulations to our winner. If he's not online, then obviously he's not going to get notified that he's won. So there you are. Right, folks, thanks indeed. I'll see you next week if I don't jump on with something this week before. But you need to subscribe to the channel to make sure that you get updated. And obviously, if you've ticked the box that you don't want to get emails from us, then you won't get notified either when I come online either. So I encourage you maybe to think about that next time. Okay, folks, thanks for that, and I'll see you very, very soon.